After a considerable recovery, high volatility returns during the peak at the 12,000 range to form a declined double top. Even though there are such large fluctuations in price, there is a strict double top that does get reversed unusually early, as a double bottom forms immediately under it to share the 10,500 level. The double top and double bottom were neither failed or invalidated patterns, but rather instances of less common price action due to the unique nature of Bitcoin during its early stages that saw historic volatility. There is also some contribution from the sustained bullish surge in June prior to the double top, along with generally lower selling volume, which initially lowered the effects of the double top. The current range also marks some key swing points that generally run through opening and closing prices of major candles during the earlier peak from 2017 to 2018. This also contributes to increased volatility of these support and resistance ranges as the initial downtrend from the double top in the 12,000s drives down and later offers resistance to the continuing recovery back to all-time highs. It could be said the all-time highs back at the 2017 to 2018 peak also presented an even more declined double top. A downtrend line could be used from that, but it would have to be too steep and only covered the initial decline. In this case, a higher downtrend line is drawn directly from the highest high in 2017 down to the more recent downswing highs of the declined double top, which makes for a more valid and relevant trend line as seen with the accurate intersection near the bearish reversal area in early 2020. A crucial break over the long-term downtrend line marked the beginning of the major recovery continuing with strength, as it slowed down but was not reversed by the 9,500 to 10,500 range into July. This range emerged as a resting phase in a bullish continuation that displayed a large decrease in selling volume prior to the late July break over 10,500. Naturally, an aggressive break like the one in late July can't be sustained indefinitely. There is normal resistance now at the lower 12,000 area, with selling pressure at moderate levels to slow down the recovery. Selling pressure is increasing to present a classic bearish reversal at a major resistance range, formed from a clear pattern. The overall bearish context remains, but there is still only moderate selling pressure despite a few red spikes. This can be attributed in part to the continued influence of the long-term recovery and the more recent bullish surge from late July. After some delay, a distinct bearish spike swiftly takes trading back to the 10,500 area, where there is almost an immediate halt to the drop. Even though this broke through a more recent uptrend line from 2020 lows, sentiment remains mainly neutral in the short term, due to the 10,500 to 9,500 range reversing roles as a bolstered support from the early 2020 downswing and the late July bullish surge. In the meantime, selling pressure and uncertainty are still present, as seen by consecutively lower downswings, since peaking around the 12,070 level. However, since mid-September, volume has remained low and price action is showing low activity with mostly small candles. A unique chart like Bitcoin provides some unique formations. In this case, there was a small-scale head and shoulders. That is a variant with two small downswings forming the shoulders, and a sharp head to peak with a heavy dark cloud cover formation. The shoulder level and neckline are inclined in a relatively parallel channel. The drop is soon countered by a short-term trend line from July that started just before the bullish range. This became the trajectory of a minor upswing in early September, and continued as part of a triangle that saw a classic bullish acceleration upon breaking resistance in early October. All these inclines certainly provided additional bullish factors to the strong break back towards record highs, with exceedingly high volume appearing just in time on October 21st. It is not entirely necessary but preferable and advantageous for patterns to have prices neatly contained within their outlines. This often adds to their validity and effectiveness due to this kind of neat price action representing clear patterns, lower volatility, and greater stability. This has been a great example where there is basic role reversal of the 10,500 area from clear resistance to support, while at the same time displaying another instance where a bearish reversal is almost immediately reversed and leads to a bullish continuation of a long-term uptrend. It is similar to the start of the case study in that a bullish pattern immediately begins after a bearish pattern completes. Near the end of the year, there is an aggressive incline maintained to reach new record highs as an ascending triangle formation completes with strong 3 methods rising price action.